Good afternoon, ladies and gentlemen. In this video, we're going to take a look in hindsight, the LYC or the Linus Rare Earths options trade that I took in my last video. I talked about a real high conviction trade and what I was planning to do. And well, we missed out on about 150K because of about one day, which is pretty rough. So I'm going to talk about what went wrong, what went right, and what to do in the future for a trade like this, at least what I'm going to be doing in the future for a trade like this. And as always, I'm not a financial advisor, so please don't take this content as financial advice, nor am I recommending you to buy, sell, or do anything in particular. This is just my opinions on this stock. So if you want to see the in-depth fundamentals for LYC and what I was expecting, it's all in here in this video. But we're going to take a look at the actual outcome of that content. And what we have is the Q2 financials. What we have is Q1 and Q4 side by side, so we can see what the numbers look like. Now, Q1, for those of you who don't know, for LYC, they were bogged down for about 2 to 3 weeks because of COVID-19. These guys couldn't be at full capacity, so the market kind of just went, okay, we'll let it slide. So really what we want is a comparison of Q4 to the latest financials, which is Q2. And what we see is a marginal improvement from 185 mil to 202, and this is revenue, not profits. We have sales receipts of 151, so it's a decline in sales, it's a decline in closing cash balance, it's an increase in production, which is interesting, but a decrease in actual NdPr production, which is also interesting. That's neodymium and praseodymium, the rare earths that a lot of people are paying attention to, that is stonking in spot price. You know, this went up about 30% from the start of the Q2 to the end of Q2. Let's have a look. I broke down the share price by the quarters. So there's Q4, Q1, and then we have all of Q2. So this is where all these numbers are coming from. And then, of course, the reporting for these quarters happens, a few weeks later. So what we ended up with was a rise from Q2. If I bring up just the ruler here, from shortly after Q2 started, from the bottom to the end of Q2, which is a 65% increase in share price. That's about 6 billion to 10 billion market cap. And then it rose all the way to 81%. And the first question I have for anyone is, do these numbers justify 81% increase in share price, or does it validate a 10 billion market cap? 10 billion market cap. We're trading at 40x in terms of revenue, right? Somewhere around 40x. So it's a little bit wild, the numbers. Obviously, LYC has the story going for it, and the story is it's the largest producer outside of China. And I'm sorry if you can hear that noise. Neighbors decided to start doing their lawn. And the Q4 numbers, the Q4 numbers compared to Q2 just aren't good enough. And the funny thing is that LYC in its report only ended up taking about 8% increase in NdPr price outside of the 30% available. All right, so it's rough, and my expectation when I heard that the Q2 numbers were coming out on the 19th, the day before options expiry, for me that was the best day. I couldn't have had better news that day. So what that meant was I stopped buying puts until this date here, the 18th, for the 19th news. And then the 20th is the options expiry. Now, what's unusual about this is that the stock didn't collapse on earnings day. It just didn't. You can see here, it was a little bit red, and then it recovered the next day, and then it collapsed. Right after options expiry, the stock collapsed. Now, if the stock collapsed like this on earnings day, we'd be up somewhere around 150K in profit from our options trade. It is what it is. Didn't work out. The timing was off, and that's really unfortunate. Now you might be wondering, well, why did this happen? And I've only ever really got one thing that stands out that might explain what happened in this trade. Now, I've been trading this style for options trading for about a little over a year now. I've got a certain criteria that I look at, certain technicals that I look at. I piece them all together, and it's worked every time, right? We've looked at about 6 trades, 6 big trades. CBA, FLT, I think NAB, definitely NAB. Commonwealth Bank, and there's at least one more out there. But anyway, I've made videos on a couple of them, and the criteria is all the same. The technicals are all very similar. The only difference in LYC that I can think of is that the same day that I bought puts, someone bought 150k worth of calls for $11.25 and 150k calls for $11.50. Now I noticed in the lead up a few days, let's just get the regular price here. So around $10.90 to $11 was insane amounts of buying in the lead up to the 19th. So from the 11th to the 19th, crazy amounts of buying anytime it came to $11. Someone or something was holding it up. Now, my suspicion is that these large call options were attempted to be exercised, either exercised or traded and pushed. So we can see it ended up going on expiry day to 11:36, and it wouldn't surprise me if those options were sold, either sold or converted. It's hard to say, but it would not surprise me if that was the reason for the share price to hold for 2 whole days. So we've got announcement day, which is the catalyst day, and then we've got option expiry day. And on both of those days, the stock did not sink below, at least not convincingly, but below $11. I think it went a few cents below. So insane amounts of buying at $11 to hold this stock up. And the only thing that I can think of between LYC versus every other put options play that I've done with the same criteria is that this had call options. Now, some people are speculating that maybe there was a heavy short position and those were hedged, as put in as a hedge. But who hedges positions 2 days into expiry, right? Someone had the same idea I had, and that was to trade the Catalyst news event, buying puts or buying options, generally speaking, the day before the announcement of the quarterly. So yeah, that's the only thing I can think of. In hindsight, I don't think at the time I would have done anything differently, because I've been doing the exact same trades, you know, depending on when the Catalyst event is in relation to the options expiry. Obviously, the shorter the time frame, the bigger the multiples. In this case, this would have been at least 25 bags of profit. You know, a longer time frame, if there was 1 week, it probably would have been more like 18, 16 bags. And obviously, the shorter the time frame, the more, you know, the more volatile and the more volatile it gets, the more bags it returns. So I don't know. I'm thinking in theory for next time, if I have only 2 days of expiry, maybe 3 days, that I take half there and the other half with an extra month expiry. So I had a look. If I took $10.50 for my options play for the following month at $10.50, so $10.50 in February minus the intrinsic value of $9.22 was the low today. Sorry, $10.50 minus $9.22. So it was about $1.28, and I noticed I had about 20 cents on top for the time value, right? So options decay over time, so that's still got a whole month, so that is about 20 cents on top in this particular situation. So $1.48, and they were going at these highs here at 30 cents. So we're looking at about 5 bags. Obviously, big difference between 25 bags and 5 bags, but it is a safer trade in case, you know, situation like this occurs in the future where the sell-off is delayed by 2 days. Now, my previous video, I also mistakenly assumed that this market darling stock could just break out a channel and come right back down. So I guess the lesson here is, you know, I was a little bit preemptive here. I was eager and ambitious on this setup to catch the short side with no catalyst, and that's my mistake. I hadn't done that before. You know, all my previous options trades were catalyst based with quarterlies coming around the corner. So this one was a TA based attempt, but in reality it was a mistake, and I'll keep that in mind for next time, not to buy puts purely based on technicals. You know, I've dabbled a few times on just technical based trades and it just never works out for me. So the lesson for me is wait for the catalyst, right? You know, I was concerned I might miss the boat on the downswing. So I mean, I did take some options trades there, but I mostly loaded up right before the catalyst news event. So it's good to see that it's good to see that fundamentally I was correct. Right, the sell-off did come, and it's still coming. I believe, you know, it might bounce off this trend line here, maybe hit this 950 and then come back down a bit into this range. And even then, the market cap is still extremely, like, bloated at this point. So it wouldn't surprise me if that's what we saw, perhaps over a bit of a longer time frame. I'm not sure we just collapsed straight down. And I know people are going to say, well, this is only selling off because the US market's selling off, but that's not the case. The US market started selling off when I bought the puts. So this is a very delayed reaction to the catalyst. It felt intentional. You know, again, that's speculation. It felt intentional that the share price was being held above 11 for the sake of those call options. But ultimately, that was the outcome. This is the first time this has happened where I've spotted, you know, 150K worth of call options at 11.25 and 11.50 as well. I mean, that's a crazy amount of money for 2 days expiry. I haven't seen that before. So next time that happens, I'll keep that in mind and do the trade a little bit differently. I will, in fact, do half and half, because this is the first time that I've sized up on an options trade. You know, my last 5 or 6 attempts were all correct and successful. So I decided to scale in, size up on the exact same method. In this instance, it didn't work out, unfortunately. Fundamentally, I guess technically and fundamentally did work out, but with the wrong time frame, with just off by a day, basically. So real unfortunate, but I think there are lessons to be learned there. And guys, I'll keep you informed if I happen to catch anything else. And look, the other thing I guess I forgot to mention was the deviation in REMX, which is the rare earth ETF. You can see just the massive deviation as well on this rise here. Everything was a screaming sell at this $11 price point. So I'm glad I was right. Unfortunate about the execution, but maybe next time I'll clean it up. And I hope you guys found something useful in this content. Otherwise, please do leave a like, comment, and feel free to subscribe if you found anything useful at all. Otherwise, guys, I'll catch you next time. Have a good one.